All right, corrective double bottom, exactly the same as corrective double top, but the difference right here is that we find the corrective double bottoms in an uptrend. Okay, so the market should already be within an established uptrend, and this is where we actually find the corrective double bottoms. Okay, the difference between a corrective double bottom and a double bottom is that the traditional double bottom is found at the end of a downtrend. So at the end of a downtrend, but corrective double bottom is within uptrends. Okay, so what does it signify? Well, it signifies a failure to make a new higher high. So pretty much we have created a higher low and we are trying to push on our way up towards creating a new higher high, but it fails, and then pretty much the market will pull back to grab more orders, and then potentially it's going to explode for a new higher high. Okay, it's really important to know that, for example, you have a higher low, you catch a long trade, the market pushes, gives you some nice profits, but something happens, it starts to consolidate, it starts to pull back, but you know that your strong low is right there. This is your major high low, so as long as we are above it, we keep longings. Okay, so the market can also manipulate below this level. Maybe it's gonna come in a little bit deeper, but again, as long as we are above this level, we keep going long. Okay. And there is, of course, a slightly bit more detailed example. We have a push, we have a very nice pullback right there. The market pushes into the highs. It stops right here. So where is the lowest point of this pullback? It's right here. This is our major high low. And as long as we're above it, it's bullish. We keep longing. Okay. Then the market pulls back. It creates the higher low, right here, potentially. We push up. So imagine we took a long from right there, we nicely push up, but then the market fails. It responds from a level on the left and it fails to break above and to continue pushing higher for a new higher high. And then we're usually going to see the market retrace back into our area. This is once again where a lot of traders get scared. Oh man, it's flushing, it's reversing. Yes, at times it's going to reverse. Of course, this is how the market operates. Maybe again, we're having a higher high, higher low, higher high, higher low. Maybe the uptrend is quite big and then you have a pullback, then the market fails, then it's going to come in again, it's going to fail again, and then it's going to shift. It happens. But this, again, a little detail that you're going to find with testing. This is usually going to happen after we have quite a few higher highs and it's time for the market to start pulling back. Okay, but as the market is already established, then we keep focusing on the strong lows. And of course, the market is going to pull back. It's going to probably grab in some liquidity, maybe throw a wick below right here. Why? Once again, the psychology. Well, there are people that are placing their stop losses below. And of course, if we also get an entry right here, our stop loss will respectively be below right here. So we can also get stop loss if we don't go break even. And then of course, the market is going to go higher. But utilizing the knowledge that we just learned and also the corrective double bottom concept, even if we have a liquidity gap, we even use this as a confidence. So we're confident, okay, people were stopped out. Right now, we're still above the strong low. Let's try to go higher. Because right now we have even higher probability of the market just rocketing. After it grabbed liquidity, it grabbed more orders with this bearish leg. This can oftentimes just be a bearish engulfing candle to trick in a lot of sellers. So a lot of sellers are going to jump in, stop loss above, but no, we are bullish. We understand market structure, so we go long. Okay, so hopefully this is clear. It is a very nice pattern. Let's have a look at an example right here. So we have, again, as I told you, an already established uptrend. We can see from right here that we are in an uptrend. We stop for a little pullback right there, and then we push, we create a new higher high. So this structure, it's not the best because it's just one candle of pullback, but it still works because we broke the high. Then we pull back, okay, we tap inside these wicks right here, okay. The market creates a bullish candle, fails, comes in again, and what does it do again? Spot it. It liquidity grabs with this wick, but spot that actually this wick was not broken. It's very little, maybe it got broken by a little bit, but it didn't close with a body. Okay, then actually what happens, so you can consider this a double bottom as well, but it's more or less a corrective double bottom because it's within the trend and the market still hasn't made a new higher high. Then you can see after this little liquidity grab right here with this wick, the market attempts very strongly to push higher. It actually fakes above the previous week high, but it fails to close above it. So then immediately what you can say, could be even a double top. Okay, so you start preparing for shorts. But what happens is that the market actually again attacks the strong low and it just wicks it, right? So this is not a break for you. This is not a break for us. This is not a body close. So we do not look for shorts right there. And what happens is the market just explodes. So again, we see double top utilized wrongly. We did not have any structure break. We did not have any confirmation, right? And this was just a simple corrective double bottom. There is the low right there, the major low. The market attempted first, failed right there, attempted second, failed, attempted third with a bigger liquidity grab this time. And then we actually launched. Okay, so there is the first example. We have a few right there. Then where is our major high low? It's right there. Massive pump into the highs. There is our weak high right there. So we pull back. You can ask about this one. According to me, this is not a pullback. It's just one candle stopped and then we continued. I would love to see a few candles down. Also, if you would like to measure them with pips, if this is EU, usually on the 4 hourly, I would love to have 20 to 40 pips of a pullback. Okay, even more than that. This right there, it's possibly not 20 to 40 pips because it's just one candle. Okay, so just little detail that you're of course going to learn with experience and by following the webinars. We pull back right there and we create a potential higher low. So right now this is our strong low, this is our weak high. There is 50% roughly. The market just dips below it and we start getting the longs. The market pushes into the highs and we target the new weak high. But what happens? It fails. And what did I tell you in the previous slide? That sometimes it just prints a massive bearish engulfing candle. Okay, and you start thinking, oh, it's reversing. Hey, we are still above our strong low. We're still in an uptrend. We're still in this push, pullback phase. We would like to see the weak high taken until like this one breaks or really start generating a downtrend. Okay, and what happens is what I told you is the market is just gonna liquidate a little bit. It's gonna take the liquidity, and then what happens? Bang. The weak high just got smashed. Okay, and you can also see how we put together right now weak highs and strong lows and how we utilize them together. So there it is, the weak high being smashed. What is our major high low right now? The strong one, it's this one. Okay, we ended up right here. We can see that the pullback right there is initiating in a very clear manner. Okay, and we created this wick at first. So this wick actually pushed into the high. So maybe we caught in some longs right there. The market tries to push but fails to make a new high. It pulls back in again. Okay, cool. Retests the wick, it even fakes it by a little bit. It tries to push up again. Okay, but it still fails to break the weak high. What happens is it actually pulls back once again into the structure, grab more orders, accumulates, and then we just smash the weak high. Okay, there it is. And in fact, this one was actually nice because this was the low, and I don't think it actually even faked the low. It just created a corrective double bottom and it continued. And also pay attention to this little graph right there. This is pretty much how it looks like. A push, a pullback, the market tries to push, fails, retests, push. Okay, new structure break. Major high low, pulls back, high low formations, tries to push, pulls back, tries to push again, fails, pulls back, corrective double bottom. Okay, targeting then the weak low, bang. Pulls back again below 50%, tries to push, fails to make a new higher high, pulls back again to grab more orders, the corrective double bottom, break of structure. Okay, and we can see here that our major high low was this one. It completely got smashed. So what we do is then we determine that, okay, my strong high is this one because we have shifted the structure. We wait for a lower high. There is the lower high. There is the new weak low being taken out. And we're right now in a downtrend. And again, what did I tell you? After the market has created 1, 2, 3, 4, 5, 6 higher highs, yeah, we should start expecting a reversal. This is how it usually works out. And you're going to build this with experience with us, I promise. Okay, so this is the corrective double bottom. We also covered the corrective double top. So hopefully it really makes sense when it comes to corrective double tops. We're having a downtrend. There is our major lower high, sorry. We pull back, the market tries to push, it fails, returns back, and then it breaks. So there is the corrective double top. And in terms of corrective double bottom, we're having an uptrend, push, pull back, higher high, there is break of structure, strong low, the market pulls back, tries to push higher, fails, pulls back in again, corrective double bottom, and then attacks the high. Okay, there it is. So again, hopefully it makes sense. If it doesn't, my DM is always open and I look forward to seeing your corrective double tops and double bottoms assignment.